Today we are doing the direct costing method versus the absorption costing method. Okay. Some of the things that we're going to touch on, it's allocation of manufacturing costs, different costing concepts, and formats of income statement, and the impact of first in, first out method and the weighted average on the costing concepts that we're going to touch on. Okay. Right. So the first one, allocating manufacturing cost. So what they mean by that is that every single product needs to be allocated the manufacturing cost, right? And if you remember from the first units that we touched, total manufacturing cost include both variable and fixed manufacturing costs, right? But these costs, they need to be allocated to the product during a certain certain period, and you do so by allocating to the units that you're producing, right? So for you to get your net profit, you need to know what costs how much did it cost you to produce this product. And under the traditional absorption costing, you must remember that you take this manufacturing cost and you divide it by your total units that you've manufactured for that period. So don't forget that. That's how we normally get that cost per unit, right? So this is just saying that allocation of manufacturing cost is important because it helps you to determine your profit, and it just helps you to have an idea as to how much did it cost you to produce this product of yours, right? And these two methods that we're going to look at, it's the direct or variable costing method or the absorption costing method. Okay. So the costing concepts that we're speaking about, the ones that I just mentioned, when it comes to direct costing method, you must remember that only variable manufacturing cost, namely your direct material, direct labor, and variable manufacturing overheads, are taken into account when you value your inventory. I repeat that. Your your variable manufacturing overheads, your direct material and direct labor, and variable manufacturing overheads, they are taken into account when you value your inventory. Variable selling and distribution costs are added to arrive at this total variable cost. So you are looking at all variable costs. Those are your manufacturing, your direct labor and material, and also your variable selling and distribution. We look at all variable costs in order for you to come to the marginal income. And this marginal income is your contribution, right? Because contribution is sales less your variable cost. And these variable costs are the ones that I just mentioned. It's all of them. Variable non-manufacturing costs as well as fixed costs, those are treated as your period cost. Your period costs are your expenses. So they come after your contribution. So already by saying this, you can already see the income statement and its layout, right? So that's your direct costing method and what it considers. So it takes your sales and then you less all your variable costs, you get your marginal income, and then thereafter you look at your fixed cost and also your variable non-manufacturing cost. And that's how you're gonna get to your net profit. Okay, cool. Absorption costing method, on the other hand, it includes both variable and fixed manufacturing cost in your product cost. So when it looks at production cost, it says that all manufacturing cost, how much was it for us to produce this specific unit, right? So all means variable and fixed. However, it excludes your non-manufacturing cost. They are treated as period cost. So now, also from saying this, you can already see the income statement that you'll have your sales and your cost of sales. Your cost of sales would be your product cost, and your product costs are made up of all those that I just mentioned, your variable, your manufacturing costs, and after that, you get your gross profit. Then you take out your period cost, and all these period costs would be your non-manufacturing costs. So all non-manufacturing cost means both variable and fixed non-manufacturing cost. Okay. So here they just explain as to what is what's a product cost, variable cost incurred in manufacturing under your direct cost, but then product cost under absorption, it's your variable and your fixed. Okay, so just note that because it plays a role in terms of how you look at your income statement, and also when we get to the part of what's this thing? Impact of first in, first out, and weighted average. We're going to get there, but you will see it being more evident as to what is the difference between the two. So, side note, when the absorption costing method is used, this is what you need to take into account, that sorry, your budgeted fixed manufacturing costs are recovered on the basis of your budgeted number of units manufacturing during that period. This is because of that whole situation. Remember in the previous unit where you say that actual fixed costs, they normally come late. They come at a later stage. So we, even accounting has proposed that we use an estimated cost per unit, right, for fixed cost. And that's by taking your budgeted fixed cost over your budgeted number of units to get that cost. The product therefore absorbs both your variable and your fixed. We've spoken about that. And yeah, the one with the largest number of units, which is what we've spoken about, that under the traditional method, we find that the one with the largest volumes or the largest number being produced has it takes most of the cost. So they say that it takes the lower absorption unit because the denominator would be large, right? This is just pure maths. Okay, so I'm just going to be speaking a bit on, I'll be touching a bit more on theory, then we're going to do questions. And just please note that today I've got an exam question that we're going to look at that I want us to do under time pressure. And then I think going forward, I will give you guys questions that we'll do, and then you guys can do it from home, and then we discuss it here in class just to save time. But then today, I will give you the question just like how we've been doing. It's just a short one though. Then I'll give you time and you guys can write. But going forward, I'll give you questions in advance so that you can do them at home. Cool. So now, the cost flows of these manufacturing costs for direct and absorption costing method are as follows. This is from your study guide. It says that under direct costing method, what you look at, which is what I've been saying, is your direct material, direct labor, and your variable manufacturing overheads. These you include in cost of all goods produced. So it forms as part of your product cost. And thereafter, you only debit against it when the goods are sold, meaning you take it into account from your sales, right? So once you sold those products, that's when you'll say sales less. When they say debit, they're saying that you offset it against your sales, and you'll get your marginal, which is your contribution. And then Your fixed manufacturing overheads are then debited immediately against the income for accounting period under review. So after you've got your contribution, you debit your fixed manufacturing overheads in order for you to determine your profit. So I'll come here. Then absorption costing, same thing. I'm repeating myself, but I find that this flow is very important that you remember it. This direct material, direct labor, variable manufacturing overheads, and fixed manufacturing overheads, which is the difference between the two. You can see that this one, when is it taken into account? Here, we take it from the beginning, that all goods produced, your product cost is these four costs, right? And then you debit them once you have sold them so that you can get your gross profit. Side note, we only allocate your fixed manufacturing cost to products in the absorption costing method. Your fixed selling, distribution, and admin costs are never allocated because they're not part of your manufacturing, right? And they are expensed the same way that it's done in your direct costing method. So it doesn't mean that when I say fixed, it's specifically to the manufacturing, the one that contributed to the production of those goods, not fixed costs that have been attributable to what the selling or maintaining of a general operation of the company. So for the direct costing method, variable selling and distribution are only deducted to arrive to the contribution figure, which is the margin. So the variable selling, they are then taken after these ones. So they say that, but you get it not after your contribution, but they form part of your contribution. They are never included in the valuation of the inventory because they were incurred once the product was sold. Okay, so these are important principles that you must know because, as I've said, they play a huge role as to how the income statement has been, how your income statement looks like. Okay. Presentation, very important. So when it comes to presentation, this is how it looks like. Direct costing method, you have your sales, you have your variable cost of sales. Remember, the variable cost of sales is your product cost, not your variable selling. Okay, so you would have your variable cost of sales, your direct labor, direct material, variable manufacturing cost. Thereafter, so you sum this up to get your variable cost of sales. Thereafter, you also put in your variable selling and distribution cost. Then you get your marginal income, your contribution. You have to look if this contribution will be able to cover these costs that come after, which is your fixed cost. And your fixed cost will be your manufacturing overheads and your selling and distribution cost. Okay. Thereafter, you take into account your administrative cost, then you get your net profit before tax. Okay. This is how your income statement format should be. Then your absorption costing method is your sales less your manufacturing cost of sales. This is your direct material, direct labor, variable manufacturing overheads. However, you now include your variable manufacturing overhead. Excuse me. Then you get your gross profit. Thereafter, you say that less other costs. These are your period costs, your fixed selling and distribution cost, your variable selling and distribution cost, and your admin cost, and you get your net profit. So here we're trying to see what's the difference between the two. This variable selling and distribution cost is taken as part of the contribution, while as under absorption costing, it falls as part of period cost. Fixed manufacturing overheads under direct costing method falls as part of fixed cost after your contribution, while as under absorption, it falls as part of your production cost, your product cost. It's important that you note and be able to articulate what's the difference between the two methods, because I've seen most questions, they do ask you to write that and explain what are those differences between the two methods. Okay, so let's look at activity 9.1, scenario 2. So let's look at activity 9.1. And then in this instance, we are looking at scenario 2. All right. Sorry, I don't see your chat. Okay, not a problem, man. Yes, so we're gonna look at 9.1, sorry, scenario 2. I'm gonna give you guys minutes as usual. You attempt the question, and then so it's part of A and B. It's A and B, but yeah. Anyway, let's read it. It says that ABC Limited manufactures a single product, one product that they do. The particulars of the February 2021 are as follows. Units manufactured and sold are 18,750. The selling price per unit is 100. Manufacturing cost, your variable, it's 468K. Your fixed is 187K. So they gave you the total cost, right? Manufacturing. Selling and administrative costs, they give you the variable selling cost is 5 Rand per unit. They give you the total cost. Fixed selling costs 50,000. Fixed admin cost is 12,005. Bit straightforward. It's an example. That's why, just to make sure that we apply the principles that I just mentioned now. I just want to test your thinking. So in terms of B, right, you need to assume here. So you have to do your income statement under the direct costing method and your absorption costing method. But in this instance, you must only assume that only 15,000 of the 18,750, which was what was manufactured, were sold during Feb. Are you okay? So now, what I'm saying is that for scenario 2, don't assume that we sold the whole 18,750. Our sales is 15,000, whereas what was produced was 18,750. So taking that into account, please do a direct costing method and also an absorption costing method, and then we can then talk about your findings. You can take me through your thinking after I've given you, I think 20 minutes would be enough for you guys. Let's say 25, but it's not a lot of info. So let's say 20 minutes. You attempt the question, and as usual, after attempting the question, you guys start talking in terms of your thinking process. One will tackle the direct costing method, and then the other one, because just the two of you, will tackle the absorption costing method, and then we discuss. Then we can then carry on with some of the objectives for today. So what you're doing, is doing an income statement, direct and absorption. Only thing is that your sales is 15,000 as opposed to 18,750. Okay, cool. You can start. Your 20 minutes starts now. Thanks. Please take me through your thinking process?
Okay, so what I did was I immediately started with my sales with 15,000 units times 100 Rand selling price. I ended up with 1.5 million. Less all the variable costs, which is the variable manufacturing cost and the selling cost. But because of the fact that that is variable cost according your per unit, that well, the total amount is going to vary according to the products sold slash manufactured. So the manufacturing cost, the variable manufacturing cost, I took was the total amount of the 4,000. I am battling to talk today. I'm sorry. The total amount is the
Not a problem.
18,750 units. I came to 25 Rand per unit times 15,000 units produced. I came to amount of 375,000 Rand. The selling cost I took as, because they gave you the 5 Rand per unit,
Yeah.
I took the 15,000 units sold times the 5 Rand, I came to 75,000 Rand.
Cool.
Then my total contribution, I came to 1,050,000. Then less the fixed cost, all the fixed cost, which is then the manufacturing cost, selling cost, administration cost, all of that stays the same because it is fixed cost. You can't, you have it month by month, or yeah, you can't change it. So that is the total amounts that I wrote there, and I got to the net profit before tax is 800,000.
Awesome.
That's for the direct costing method.
Yes, that's the direct cost method. I just want to check, Mpo, are you with us, or maybe put in the chat?
Hi, TV. Sorry about that. I'm just struggling today with the kids, eh?
Oh,
So
is
I'm
it?
just a bit distracted.
Okay, not a problem then. If you could just follow us, right?
I'll try.
Okay, cool. Thanks.
Thanks.
Marika, can you please take us to the absorption one?
Yes, sure. So the sales stays exactly the same as with the direct costing method. The the cost of sales is going to differ. It's not variable cost anymore. It's actually changed to the cost of sales.
Yeah.
The variable manufacturing cost is, well, how I worked it out. I saw that they worked it out differently in the study guide. So, but how I did it was the variable manufacturing cost. I kept it exactly the same as with the direct costing method. The fixed costing method, I worked it out. I took the total amount that they gave, divided the 18,750 times the 15,000 units, it came to 150,000. So the cost of sales is 525,000, which is more than what the direct costing method is. So then I came to a gross profit of 975,000. Then I deducted the variable selling cost, but then because of the fact that it is a variable selling cost, it must be a portion to the units that was actually sold.
Yeah.
So I took, it's again the 5 Rand per unit times the 15,000 sold. I came to that amount. And also it is exactly the same as the direct costing method. Then, but your fixed selling cost and your fixed admin cost is exactly the same. And then I came to a net profit before tax of 837,500. Sure, I can talk again. Yeah.
Yeah. All right. So if you could look at the profit, absorption cost has more, right? When we look at, it's got 837 as opposed to the direct method has, the absorption costing method has 837, and while as the direct one has 800. Thank you, Marika, for taking us through the solution. But yeah, if you can look at it, it has that. So let's try to see why is that. But
I'm TV. I'm
yes,
here. I just have a question, eh?
yeah.
From the direct costing, right?
Mm-hmm.
So the reason why we're having the closing inventory, it was because of we were actually supposed to sell 18.750, but now due to maybe circumstances we only sold 15. Is it that why we having those cost of sales and inventory?
That's why we having closing. Yeah, that's why we have a closing inventory
Okay.
cost. Yes,
Oh,
because you
okay.
have to take it into account. It's gonna go to the balance sheet, right? You have to
Yeah.
show that at the end of the day, our closing inventory, we've got this stock on hand.
Mm-hmm.
Yeah. So you can't take it as you we less it because you have to show that yes, we did manufacture 18,750, but then there's this that goes to our balance sheet.
Okay.
Yeah, so that's why.
And then another question is, only when we have such situations, only the variable will change. The fixed stays the same.
A variable will change, yes, because but then uh, the fixed stays the same, right? But then it depends on which method are you on, right? Because
Yeah, yeah.
under the direct costing method, your fixed will come after your contribution as a fixed amount, like 187,
Mm-hmm.
a total cost. However, when it comes to the absorption costing, you have to now on that you have to find the cost per unit that
Yes,
includes both variable and uh, fixed
fixed.
manufacturing. Hence,
Okay,
that's saying your total, taking that. So it stays the same for direct costing method, but then for the absorption, you have to get the cost per unit.
okay.
Yeah.
All right, thank you.
Okay, cool. But then the fixed selling and the fixed admin will still stay the same. It's just that what changes under absorption, it's the cost per unit here. Okay. Right?
I have one question.
Yes.
I didn't show, for instance, the closing inventory, opening inventory or closing inventory. If this was an exam question,
Yeah.
would I have lost marks? Is it, for instance, that they, with this type of question, they want to see that you know that there is closing inventory and that it must go to the balance sheet? Or because I just wrote manufacturing cost and my calculation next to it to show how I got to it.
So are you asking, you're saying that for the exam, is it necessary to show opening inventory and put a dash
Yes.
and then put in
And
closing
then
inventory?
show the closing inventory.
You
Is it
have to
important to do
show
that?
what's there. So you have to show that there was a closing inventory. You have to show that you are listing it out here. So you
Okay.
saying that are you asking, is it necessary to show the calculations?
No,
No.
no, it's fifty. No, because if you keep your screen right there, with the variable cost, I
Mm-hmm.
only wrote, for instance, the variable manufacturing cost
Mm-hmm.
is, and then after that in brackets, I wrote my whole calculation, and then I showed the total. I didn't say that opening inventory is that. I didn't do it exactly like
Exactly
the
like
study
this.
guide did
I
it.
think get into the habit, because you know why I say that, get into the habit of saying opening and your cost, then you have your less, your closing inventory. But I'm saying get into the habit of that because sometimes, most of the time, you get marks for presentation.
Okay.
Yeah, so show these two, but
Rather write too much and get perhaps a mark because you don't know exactly where the marks are going to be allocated in the exam.
Yeah, but get into the habit of writing. If they say put a statement of income statement, I also can't talk today. I don't know what's going on. If they say that draft a statement of comprehensive income, get into the habit of writing it correctly. Say you have your sales less your variable, but this is under direct cost. Variable cost of sales. What is variable cost of sales? I must have my opening inventory. I must have my manufacturing cost, and then less my inventory. So I'm saying get into the habit of doing that. It's important so people can see the layout. Unless you must do it if there is like a possibility of closing inventory. But if you don't have any closing or any opening, you can go straight to this, right? But I'm just saying if there's this whole thing of opening and closing, just make sure that you have thought about it, because presentation, it could be a thing of, oh, okay, she noticed that we don't have opening inventory. Just say.
Okay, cool. Thank you very much.
Yeah, so get into the habit of, if they say they want the statement presentation-wise, get into the habit of writing it this way. But if time pushes you, don't feel bad. But I say that try, because a 1 mark can take you far for presentation. Okay. All right. Let me get back here. Can you guys see the presentation, right? I hope you can.
Yes, we can. Thank you.
Okay, awesome. Add some notes you read. We've spoken about them in school. Then the impact of weighted average method and the first in, first out method on both costing methods. The mouthful. Okay, yeah, we almost there because I want us to have time to do the exam question. All right, so here it says that we must look at activity 9.2, so we can see the impact of these two methods on the costing methods, right? Okay, let's go there. We can look at activity 9.2 together, just to save time, because I'm looking for an hour. Yeah, cool. Let's look at it together. Then you'll do activity 9.3. Says different inventory valuation method. The first one is the weighted average method. So remember, there's the costing method, which determines how your income statement is going to look like. And then there's the inventory valuation method, which is your first in, first out, and your weighted average method that we covered last week. So the following information were obtained from the accounting records of XYZ Limited for the year ended 31 December 2020. I'm going to say that. And from the year, from the budget 2021, we've got actuals, we've got budgeted, and they tell you that for inventory at the beginning of the year, for our actuals, we've got nothing, but for budgeted, we are estimating that we will have an opening inventory of 7,000. Production for the year, we currently produced 168,000 units. However, we estimating for 2021, we're going to have 154,000 units. How much did we sell in the current year? 161,000. And we are estimating that for 2021, we're going to sell 140,000 units. Cool. So those are the units. Then you can already see from this that we're going to have some closing inventory, right? We are. Cool. Then fixed cost, give you manufacturing, they give you the sales admin. Then the variable, they give you the cost per unit, give you manufacturing, they give you the sales. Then they give you the sales price per unit. Okay. Then now they tell you that the enterprise uses the weighted average method of inventory valuation. Okay, refer to topic 3. That's what we looked at last week. It should be fresh. Okay, so what is the required? They say that you must draft a budgeted statement of comprehensive income, the budgeted one, for the year ending 31 December 2021, according to the direct method costing method, absorption costing method, in order that the differences between the two approaches are clearly illustrated. You see, they say you must make sure that we see the difference between the two. Show your calculation to the nearest rand. Remember last week we were saying that we were having an issue in terms of the rounding for weighted average, remember? So at least here they tell you that you must show your calculation to the nearest rand. And you may assume that the 2021 budgeted opening inventory was correctly valued at the 2020 closing values. So they're saying that you must consider that in terms of how you value your opening inventory. And then in 2020, the actual number of units produced and actual fixed manufacturing costs were equal to the budget, resulting in the budgeted fixed allocation overhead rate being the same as the actual. So why are they saying this? They're saying this because they're saying that there's no over or under. Remember, unit, I think it's 1 or 2. Talk about the overs and unders. So they're saying that what the budgeted fixed overhead allocation is the same as the actual. So there's no overs and unders. Okay. With that information being said, let's look at the solution. So the solution, sorry guys, I just have a problem with my lungs today. Budgeted contribution, we will have our sales. Our sales is straightforward. It's that 140 here that they gave us, and then they gave us the selling price, which was 35 rand. And then the sorry guys, it's 11:30, right? Auditing is at 11:30. Sorry, I just got a text. Oh yes, 11:30. Sharp. So variable cost of sales. Look at the presentation. The opening inventory, they're saying that it's 7,000 multiplied by the 8 rand 40. Okay. Let's see. So they took this. You guys are still following me, I hope. They took this because this is under the direct one, and they did mention that your opening inventory is equal to the actual. So you have to use your actual cost. And under direct costing, we are using variable manufacturing cost. Cool. So it's 8.40. And then your your variable cost is 140 multiplied by 11 rand 20. Okay. 11 rand 20, it's current. So you take production for the year with the current manufacturing. Cool, straightforward so far. And then you get your cost of goods available for sale. It's the amount. Now you need to less your inventory. And for me to do that, you have to then, let's look at Calc 1. You must say that, okay, fine, they gave me the opening inventory. There I have it, 7,000. The budgeted for the year is 154. So I've got units available for sale being the 161. Then now I have to less my budgeted sales, it's 140. So my closing, it's 21,000. Okay. And then after that, after getting that, we continue. So now we have to calculate the value of this 21,000. Okay. And this is how you do it under the, I hope you guys are aware. It works out most of the time, and you will see it in the exams. You have to know this method as to, under the weighted average method, how do I value my closing inventory? Okay. So you'll take the units. It's a formula, always works out. It depends how you guys understand it, but normally it works out. You'll take the units of the closing inventory, which is the 21,000. It's like apportioning, if you think about it. You are apportioning the cost of goods available for sale. So you're taking 21,000 over the units available for sale, which you just determined here, 161. You take that ratio, you multiply it against your variable cost of goods available for sale, because you are trying to get a portion of that value. Then your value is 233. All right, which is this one. So that's your closing. And then the other stuff, they come as we always know, variable cost for sale. It will be your opening plus your variable cost less your inventory. That becomes your cost of sales. And then you also take into account your variable selling cost. There you go. And then you get your contribution, yada yada, then they come down. Are we all good? So what we needed to be aware of is this whole thing, that when it comes to the closing inventory, you apportion it against the variable cost of goods available for sale. Okay. I hope you guys can follow and you understand. Okay. Okay, cool. Then for absorption costing, let's see how it's done. It's the same principle, guys. It's the same, literally. But let's look at it. Sales, fine. We know what it is. Manufacturing cost of sales, we have an opening inventory. So now, with this opening inventory, remember, under the direct costing method, it was straightforward because we could see the cost straight up. But then under absorption costing method, you have to go and calculate what is this opening inventory. So to calculate it, we take the variable cost, that 8.40 Rand, we add it with the fixed cost. Because remember, for absorption, we are taking into account variable and fixed. That's why I'm saying that under direct costing, it was straightforward because it's only variable manufacturing. That's why we could just take the 8.40 and apply it against the 7,000. However, for absorption costing, because it's a mixture of your variable and your fixed, you need to do the same thing and do an apportionment, right? Of saying that what is my cost for opening inventory, right? So you would do the same thing as we've been doing it because it's a weighted average method. You take your units of closing inventory, 7,000, over the 168. You multiply it against this cost of manufacturing of the 168, which is 1.6 million, and then you get the value of your opening inventory. Are we all good? I hope you are. So if you don't take this route, you can take the other route to say that I've got the variable cost per unit, which is the 8.40. What is my fixed cost per unit? So your fixed cost per unit, you take your 252, which is what you've been given, and you get the cost per unit, you divide by the 168. Then you get your 990, you apply it against the 7,000. You choose which method works for you. Are we all together? I hope you are. Okay. So that's that. And then what's the other thing that I wanted us to look at? And then your manufacturing, same thing in terms of how we treat our manufacturing. But then when it comes to the closing, because I just wanted you guys to be aware as to how an inventory valuation method impacts your closing and opening, right? So under this, it will be the same principle even with your closing. You must apportion, always apportion. But then be aware that now with your units available for sale, you must take your opening plus what was manufactured, which is the 154. There is the difference, then you still apportion. So then the rest would be as we know. So I hope you guys can see that, okay? When it comes to the weighted average method, which part of my income statement, which line item does it affect? It affects my opening inventory and my closing inventory. Okay, then that's step number one. Number two, how would it impact it? What is my toolbox? What is it that I need to be aware of? Under the weighted average method, I need to be aware that I need to apportion the total cost of goods available for sale. I need to apportion it to my opening inventory, and I also need to apportion it to my inventory, my closing inventory. That's how you can do it. And with your opening inventory, because it comes from the previous production cycle, those are the costs that I use. And then for my closing, I use the cost for this specific production cycle. And that's how you would get your answers. And then, so that's number two of how you get it. After understanding as to how you get it, number three, it will be a thing of which costing method am I under? Am I under the direct or am I under the absorption? If I'm under the direct method, I'm only thinking about variable manufacturing cost. If I'm under absorption, I need to now think of my total manufacturing over cost, which is my fixed and my variable when I value my cost, my inventory. Then you should be good to go as to approaching these type of questions. So now let's try to look at the first in method, first in, first out method, how it treats what we just spoken about. Yeah, I hope you guys, because it does come up and it pops up in exam questions, okay? So under the, what's this thing? First in, first out method, because it's under the directing costing method, remember it's straightforward because we have that variable. We only take into account variable manufacturing, so it's straight. When it comes to your closing, let's look at how they did your closing. They took the 11 Rand 20. Let's try look at the 11 Rand 20. 11 Rand 20 was the, yeah, 11 Rand 20 was the variable cost per unit for this specific cycle. And then the 21,000, we know how we got that. And so it's straightforward. It's not like the weighted average one. So it's straightforward. You take your variable and you multiply by your closing and you get your closing inventory. And then under the absorption costing method, it's you have to apportion it. Why? Because now we have to take into account what? Your variable and your fixed. That's why you have to apportion it. Okay, so I hope you guys and then your opening inventory is the same as how you did it under the weighted average. So the principle's the same, so just be aware of that. Are there any questions before I move on?
No, we must just look at specifically what is different to how it is treated, and yeah, and it's just practice, I guess.
Practicing is very key so that you don't have to think twice. I would normally, how I used to do it is that you see how I force you guys to tell me your thinking process? Write them down because that's like your process of approaching a question specific to that topic. So with this, you must write your pointers to say that step number one, when I have a question that is under, let's say, absorption costing method, how do I present it? You write down sales, this structure without the calculation, master the structure. So number one, I must get the presentation right. Okay, cool. So how can they throw me out? Like what are some of the principles that they might test me? Number one, it could be that what is the difference between my absorption and costing method? Okay, under direct costing, this is how I approach things, this is how I approach things under absorption. Cool, I'm happy. Now, weighted average, first in, first out method. How would I attempt a question where now my inventory valuation method is different? Which line items would it affect? It affects my opening inventory and my closing inventory. How do I approach it? Under direct costing method, you write it down. Under direct costing method, I know that it's simple when it comes to the opening inventory because I'm using my variable manufacturing cost. Done. However, when it comes to my closing inventory, I need to apportion it against the cost of goods available for sale. Under direct material, it would be those variable costs. Okay, cool, I'm done. Now, under absorption costing method, it's a bit tricky because it's fixed and variable. Then you apportion it. Then you should be able to know that when you are given such a question, what is your thinking process and you apply it. When I say apply it, is those steps that I was telling you. Once you've applied those steps, it's a matter of calculations multiplied by this, but you know what to get because you already have a framework. So write templates. That's what I'm saying. Write your structure templates to know how do I approach questions before, because what we normally do is that when we get a question, we just go straight into multiplying and just trying to get answers. But you didn't plan your answers. So plan answers before you answer them because it helps you to know what to look out for, what to get, and know what to apply. Then it's easier. Yeah, so with practice, you guys will be fine. With practice, just get into the habit of, you see how they say in notes, they put step one, step two, write your steps so that you know how to approach questions. Okay, so we're moving to, yeah, we're almost there. I'm just taking note of time. So we're moving to reconciliation between the net profits. Reconciliation between the net profits. Remember when we did activity 9.1, I make you guys aware that under the direct costing method, our net profit was about 800,000. But then under the absorption cost, it was 835,000. So now we're trying to reconcile these two profits, and these are some of the stuff that you need to be aware of. They're saying that the difference between the two methods is because of the fixed production cost that's being deferred where in that closing inventory. Remember when I was telling Mpo that closing inventory, saying less closing inventory, we are taking it to the balance sheet. If you think about it, right? Because you are reducing your cost by that closing inventory. So the difference that you would have between your direct and your absorption is that under absorption, there's a fixed cost in that closing inventory. Am I correct? Yes, I am. Because under direct, it's variable. Under absorption, it's your variable and your fixed cost. So there's a large amount that's being deferred under your absorption because we're taking a huge chunk of those costs. It's two costs. They're now being taken to the balance sheet. That's why you would see that you under your absorption costing method, your net profit will be higher than your direct cost. And it will only be that way when what happens when you have your closing inventory, because that's the portion that goes and that becomes deferred to your financial, your balance sheet. Okay. So I hope you guys are aware of that. So let's look at activity 10.2, but yeah, let's go to 10.2. When you don't have your closing inventory, you won't have any differences. So let's look at what method, what are we using? Oh yes, let's look at which examples were they using here? Oh, activity 9.2. Let's look at it. So we had the net profit according to this. This is how you do your recon. So this is another template that you must write to say that, okay, fine, you have one of how to deal with the income statement. That's number one, with all the stuff that we spoke about. Now you write another template to say that after I'm done with the income statement, if I have my opening and closing inventory, chances are I would have to reconcile my net profit. So what is the structure for net profit? Here it is. You would have your net profit without even looking at the curves. Net profit according to direct absorption, and then you put a difference. Then number two, I must have my opening inventory according to the two methods. Then I must have my closing inventory according to the costing method. Then I must have my recon. I must be able to do a recon in rand value and a recon in units. So know this thing NBNB because it's normally being asked. Okay, so you must know them in terms of in rand value and in units. And then the question when it comes, it will direct you as to do they want the recon in rand value or in units. If they want it in rand value, you'll be able to do it. If in units, you should be able to do it. But know them for now. Sharp. So direct costing method, the net profit from that income statement that we're looking at is 2.3 and absorption is 2.4. So the difference between the two, we've got 34,000. Okay. You now then put in your inventory according to the two methods. Under the direct costing, we had 58. Under absorption, we had 69. So the difference is 10. Under the closing inventory, with 232, 277, we've got 45. So now reconcile in rand value. You take the opening inventory difference. What is the opening inventory difference? Is the answer that you just calculated here. So you get the 10.5. Then you take your closing difference. That is the 45. And then you put it here. The difference between these two will give you what? It will give you this that we're trying to reconcile, because you are trying to strip it to say that what's causing the difference between these two net profit. It's your opening and your closing inventory. They should give you that. So it should reconcile to that. Okay. I hope it makes sense. Then one question could ask you in units. How do I get it in units? You get your fixed costs in your opening inventory. That will be your 7,000 multiplied by 150 from your calcs. It's that. And you get your fixed cost in your closing inventory. These are, it's that 10.5 from that, and then you get your, these are from your, it's from what we were calculating. You get your cost, you divide it by the units, you get your cost per unit, and then you multiply it by the closing inventory, and then you get the amount, and then it gets you to the net profit. Any questions, guys?
No, not at present.
No questions. I'm happy about that. So Let's do this question. Can you guys see the new question?
Yes.
Okay, cool. So let's do this one. So this was the October and November 2013 question. You see, the first part of an exam question, they have multiple choice, and then they give you the topics. So first topic that we're going to look at, it's the direct and absorption costing. It's 15 marks, and they even tell you the time, which is lovely, because I know with honors, they don't give you time. You have to know how to calculate your time. And how you normally calculate your time, you say 15 minutes. Oh, okay, cool. How do you calculate your minutes? Sometimes they don't give you minutes, but let's say when you don't have minutes, how you calculate the time that you need to spend on a question, you take your marks, you take out your calculator first, you say it's 15, you say 15 multiplied by 1.2. That's how you multiply, try to get the minutes that you need to spend on a certain question. So it's 18 minutes. Okay, so let's go to it. And as you can see, like some of the multiple questions is the things that we were covering. You see, first in, first out is there, your materials. It's those topics that I was telling you, see, over and under. But in a multiple question, look, it's 2 marks. So you say 2 multiplied by 1.2. That means you must spend 2 minutes in this thing. So that's why I was saying that understanding the principles is very important, because when it comes to multiple questions, you don't have enough time. You must be able to answer ASAP. Okay. But anyway, let's get to the question. I'm going to read the question with you guys and then give you that 18 minutes for you to attempt it. Okay. So let's read the question together. It says that the management accountant has presented the following information for Vivo Pty Limited, which manufactured a single product type. Nice. Single, so you don't have to stress much. For the year ended 31 October 2013. Your prime cost. Now you must know what are prime costs. Prime cost per unit, they say variable. It's 120 for this year, but last year it was 105. The selling price per unit is 200 this year, but last year was 180. Overhead cost, let me reduce this so that it's all in one. Cool. Overhead costs, you've got your manufacturing variable, 45 Rand per unit. Your manufacturing fixed, it's 150,000. Your selling and admin fixed, it's 80,000. Your selling and admin variable is 2 Rand. Additional info, Vivo Pty Limited manufactures 20,000 units each year. Units sold during 2023, also 2013, was 15,000. The cost structure of Vivo, except for prime cost, remained unchanged. Your opening remained unchanged for 2012. Opening inventory is 2,500, calculated for IFRS. At the first of that, it was this amount. Okay, and they're saying calculate for IFRS, ne? So be aware of what that means. I'm not going to talk much. There was no opening inventory last year. Okay. Vivo Pty Limited applies what? The weighted average inventory method. Okay. So now, first question, it says that you must draft the contribution income statement for the year using your direct method. 7 marks. So if it's 7 marks, that means that you take out your calc. As much as they said 18 minutes, you must then, because there's a mark, wherever there's a mark, you say 7 multiplied by 1.2. That means you must spend 8 minutes, 8.4 minutes on doing this income statement. And then the other one is for absorption costing. It's 8 marks. So you say 8 multiplied by 1.2, that's 9.8 minutes. So you need to time yourself. And those are the only two questions. At least they're not asking you to reconcile. So I'm giving you 18 minutes to do this question. And it starts now. Time is up. How did you guys find it?
Oh, wow. It's a special one.
A bit tricky.
Guys.
No, but
Okay.
Kiwi, my challenge, ne, it
Yeah.
was mainly when it came to the closing inventory.
Mm, okay. And
Yeah.
Marika, was the time, the pressure? How was it?
Well, about, how can I say it? Yeah. It was, I just started. I didn't plan ahead at all. So that's definitely that tip that you gave with the template thing. I'm definitely going to use
You have
that
to do it,
because
guys.
eventually I started working out the closing inventory, and then I ended up working out, calculating the closing inventory as the opening inventory, and the halfway through I realized, oh no, hang on, but I did this, they upward lopsided. So I started halfway all over again. That's why I said, oh, this is special.
And did you guys finish on time? Did you finish the first question within 8 minutes?
I took the
No.
whole for A.
So you see why exam technique is important. So exam technique, guys, and I keep on saying, we know that you guys know the principles, you know your theory, you have that. So that will get you like 40%. So when a person gets 40% from an exam, we know that you have knowledge. So now for you to pass, for you to even get your 60s and 70s, it's all exam technique. So exam technique is pressure of time, being able to do things according to the allocated time, starting with the question that you feel like it's easy. You always have to start with the easy questions. And number three, it's all about planning your answer. If you have to say that out of that 18 minutes, I'm going to spend 2 minutes planning my answer, trust me, you will find that you don't even use up the entire 18 minutes because you would know what you are looking for. So planning your answer is very key. So let's look at the solution together. Sorry, guys, shame. But it's good practice. So I'm going to keep on doing this. We do theory, we do examples, and then we have to do a question. So ideally, we should finish this October exam while we do the questions. And then also another tip is that after we're done with direct and absorption costing, try to look at previous questions. You must see at least 4 or 5 ways that they ask it differently. So you see here, they're asking income statement is straightforward, under weighted average. You must find one with first in, first out. You must find another question where it has your reconciliation. You must find another one where they ask you theory to say, what's the difference between the two costing methods? You must find the fifth one would be, sorry, I'm giving you an example. The fifth one would be one that says, what are the advantages between the two methods? So you see, there's 5 different ways that they can ask this question, this topic. So with each topic, find 5 different ways that it can be asked. And from all those 5, you are tempted under exam pressure, you time yourself, you are tempted, you look at the solution, you look where you went wrong, and you start writing that template to say that this is, if they ask me this is my template, this is my structure. If they ask me this, these are the points that I need to make sure that I articulate in my answer. Guys, get it. If you do that, trust me, by the time you get to the exam, When they throw you with anything, you should be able to use your tools and answer on time correctly, and you move on to the next thing. And you also, what's important is knowing what you're looking for, solving that X. But it all takes what? Practice. So the more you practice, that's how you will feel. I mean, you will see different ways that they ask it. But anyway, let's continue. So, direct costing method. So, I'm looking at the time. Is it fine if I talk you through the solution and then you let me know if you have any questions? Because I'm just looking at the time.
That's great. Thanks.
Okay, cool. Thank you. So
It's
sales,
okay.
thank you. So sales is straightforward. We know what's the selling price. We know how much we sold that year. So that's straightforward. You see even here, straightforward. Then variable cost. Our opening inventory, we've got 2.5. However, we have to find this 150. So what is this 150 made up of? It's 105 and 45. So 45 is the variable cost. We have it here. And then the 150, where do they, sorry, it's the 45 we got, the 105. 105, it's this one. So they took last year's one, the prime cost, remember it's the prime variable. They took last year's one and they took this year's one. It's the 45. Then it gives you 150. Variable manufacturing costs, the 25 multiplied by the 165. So 165 is made up of that 45 plus the 120, which is the current prime cost. Okay? Good. Then you get your cost of goods available for sale. Then your closing. How did they get their closing? You say opening plus produced minus the 15, which is what's being sold. Then you get your 7.5. And then you do that whole apportionment. So you say 7.5 over the total produce. So that's your opening and your current produce, that 22,500. You apportion it against the cost of goods for sale. Then you get your closing. Then the rest is your manufacturing. I mean, that's your cost of sales. Then your variable admin. That one we have it is the 2 rand. You multiply by the 15, which is what's being sold. This is a principal mark, by the way. So you get your mark there. Then you get, you see, you even get marks for saying wording. You get a mark for that. So contribution, there you recognize that I need to get contribution of 520. Your fixed cost, it's been given, it's your sale and admin, and then your manufacturing is also given, and you get a mark for adding up. So do you see the free marks here, guys? 1, 2, 3, 4, 5. So you needed to make sure that you get 5 correct, and the other ones are principal marks for you to get a 7. All right. I think it was straightforward. How did you guys find this particular one? Before we go to absorption.
Well, after seeing the solution, yeah, it's not even tricky as we thought.
It's straightforward. Straightforward. NB, guys, learn how to treat this one. And you'll be fine. But also seeing where the marks are. You get a mark for putting in an opening inventory. You get a mark for your variable. So you're identifying that my manufacturing cost must only be variable cost, and then you show the calc. So always make it easier for the marker to follow your thought process. Your calcs, you put it under your income statement. Things like that take you a long way to show that you took your time to plan, you know what you're trying to present. So you also get a mark for your closing. Closing inventory is a lot of marks, is 2 marks. But things like putting in your variable selling and admin costs, it's a principal mark because you're showing that you understand the principle of direct costing method, that we need to take into account our variable manufacturing cost and our selling and admin to get what? to get the contribution. So you remember when I was telling you, Marika, that presentation takes you a long way. And here it is. You get marks. Okay. And you get a mark for adding up. Yeah. So it's a principal mark also. So don't just say net profit and just not add. Okay. Let's look at absorption weighted average method. So sales is exactly from A. You don't have to show the calc. You can say from A. You see certain things like that. It helps you with time. If you did multiply by 200, that's a lot of time. So you can say take it from A because it's all part of one question. If it's going to be the same. So you say take it from there. So you get a principal mark there. So the presentation here is different from that other one. Less cost of sales. So what is my cost of sale? You say opening inventory, it's given. Then you say that it's a principal mark. Then variable manufacturing, you say from A. So you see you're saving a lot of time from recalculating, but you need to reference as to where is it coming from. Then it's that one. Fixed manufacturing overheads, it's given, it's the 150, you put it there, it's given, it's a principal mark. It's just show that you understand. That's what's key. Show that you know what absorption costing method involves. And then I'm just looking at the time, I'm going to close it faster. Cost of goods sale, you get it. Then your closing inventory, it's all about apportionment. So it's the 7.5 that you calculated from A, the 22, which we also saw from A. All you're doing is just to apportion your cost of goods sale. Then you get your 2 marks. And then your gross profit, you write it down. You get a wording mark for that. And you say less your selling and admin cost. You say variable from A and fixed is given. And for showing that you took that into account, you get a principal mark. And then you get your 8 marks. So do you guys see? Huh?
Yes, ma'am.
Yeah. So learn the structure. Learn how to treat your closing and your opening inventory. Then you'll be fine.
And more practice.
More practice will make you be eager to answer things quickly because you know you have your template, you understand what you're looking for, you know how to give. And this B, it's less time because most of the things you calculated from A. It's just a matter of making sure that you reference it. Reference. Don't just say 3.3 million. Show us where you got it from. Okay.
Thank you. Can you just quickly go back to the exam question?
Okay.
Please. I just want to see something.
Mm-hmm.
Yeah, no, I totally missed that. The next to the prime cost, I totally missed. I saw it when we read it, but
Yeah.
I totally missed it.
Yeah, and they know. They know. They know. Yeah, that's why when you said you were looking, I knew what you were looking for. Here it is.
Yeah. Yeah, no,
Yes.
I'll have to do what you said with the templates and physically go and write down this is what you do, this is what you do.
Right.
How to
Because
calculate opening balances.
yeah, because I force you guys to say it in here so that what am I doing? I'm building your muscle, your memory muscle. Because once you've written it down, once you've done questions, as Mpo said, via practicing, find those 5 ways of doing things. I mean, of how it can be asked, your advantages, your differences, and your recons, and then after you're done, I'm telling you that by the time that you attempt more questions, it will be second nature. You will know that whenever I have a question like the exam, I'll start with direct and absorption costing because I know it. No one can tell me anything, you know. So summarize your things and know your principles and the structure, you will be fine. And practice. All right, guys.
Yes, thank you.
Yeah. that's it for today, guys. I hope you learned something. I'll see you guys
Definitely.
next week.